There are good solutions and one best solution to increase your cash flow and net worth. In the next 3 examples, you should pay special attention to the ROI, return on investment, generated by the initial deposit, how much money they withdraw tax-free, and finally, what is the death benefit amounts over the years. This video will also show you 9 ways our flex leverage system is superior to any premium financing of life insurance. Let's look at the value that FLS provides using 3 examples. A slide with a table follows, contrasting the 7 major differences our FLS has with typical premium financing, and you will agree there is no contest for both you, the writing agent, and also the client. A business owner couple with teenage children buys life insurance on all 4 family members. These funds are placed in one of America's largest life insurance companies. The only financial requirement of the client, as mentioned, is a one-time deposit, and they have checkbook access starting year 2. In this case, $1 million is deposited, and over 50 years, they pull 256 times more money out. Numbers 1 through 3 show how much money the client pulls out and at what age. Look at number 4 and 5. Even after taking out $256 million based on these assumptions and projections, the death benefit at age 99 is $135 million, and the account value is $116 million. Compared to other premium finance insurance, we're using conservative assumptions. The best part is the client's risk and restrictions are far more agreeable. Now, that is several times greater value than a straight life insurance policy can provide. Agreed? A benevolent, wealthy business owner beloved by his employees who believes in doing well by doing good. FLS, Victor realizes, is a fine-tailored suit that can be customized, adjusted if you like, to fit your specific needs. Victor was more interested in giving back. He'd already done so well, and he decided his priority was to help both nonprofits and financially protect the families of his 10 key employees. To achieve that, Victor deposits, one time only, $1.8 million into an FLS account. He never deposits money ever again. A business owner can increase their capacity by buying permanent life insurance policies on their employees. So that's what Victor does. And he buys it on 10 key employees, and they're going to receive 50% of the death benefit, and Victor will receive the other 50%. Actually, the nonprofits that Victor cares about. That's doing well by doing good. And unlike term insurance, the beneficiaries of these 10 employees will collect with a probability of 100%. It's definitely going to happen. And if one of those employees dies in year 16, their family collects $8 million per employee. In year 1, the combined total death benefit is $88 million. Victor owns half. Year 2, it doubles to $168 million. By year 3, it's $242 million, and Victor owns $121 million of that. Victor decides to start pulling out money in year 4 because FLS, unlike premium financing, has checkbook access. It's a cash management account, paying compound interest, not the simple interest of a bank checking account, and a much higher percentage. Victor starts pulling out at least $200,000 after tax every year, and by year 10, his account is making 13% compound interest on his funds, using conservative assumptions, and he's pulled out $2.2 million. In other words, he's got his money back, and he has a $121 million asset. By year 16, Victor has pulled out $11 million of after-tax money. He gets all of that money, and he's projected to earn 20% compound interest annually, and again, he has a $121 million death benefit, guaranteed to pay out. Not bad for a deposit of $1.8 million. Go find me a bank that'll do that in their checking account. A 54-year-old real estate investor who quickly understood that FLS, our unique premium financing program, offered her a far better return than the real estate that she's invested in, and most importantly, without the headache of dealing with tenants and their toilets. She deposited $393,000 and may pull out 62 times more money, $24.5 million, over the next 34 years, based on, again, conservative assumptions. At age 88, her projected death benefit is $122 million, and the account value is $8 million. For those that want to leave a legacy behind, FLS enables you to help out your church, your synagogue, a nonprofit or school in powerful ways while helping those you love. If you're not completely familiar with premium financing of life insurance, this table will do a great deal to open up your eyes. Premium financing is simple. If you're a very successful business owner or wealthy person, you're used to making 20-25% more on your money. And with premium financing, all you're doing is you're having a third party put up their money. And you pay them 5, 6, whatever percent interest, and they make the insurance payments for you. You don't make them. And you put your money to work and you keep the spread, the arbitrage between what you can get when you invest your money and what the cost of the capital is. That's all it is. Real simple. So let's look at these 9 advantages that we have over premium financing. Number 1, we only require a net worth of $1 million instead of $5 to $10 million. That's a much bigger market. Number 2, many premium financing deals die when the client finds out that they have to lien their house and often their business. With FLS, that does not apply, since the only collateral for the policy is the policy itself, nothing else. Number 3, checkbook access. Being able to access your funds is critical if you have a business or if you're a real estate investor or just to take advantage of opportunity that may come your way. With ours, you can. With premium financing, you cannot, at least for 10 years. Number 4, we all know the Federal Reserve has kept interest rates artificially low, and they're 6.5% according to the media in December of 2021. At some point, rates will go up, and those people with premium financing will have a capital call. They run the risk of asset seizure of their home, their business, if they cannot afford the increased payment. 6, with premium financing, you're underwater for 10 to 12 years. With ours, you're debt neutral year 1 and every year thereafter. 7, after 22 years of looking at premium financing cases, we've never seen one that performs at least half as well as ours. In other words, we perform at least double the best premium financing we've ever seen. 8, the ability to increase the amount of death benefit, which you can do by insuring employees. You're doing a lot of good in the community as well, and you also get to keep 50% of the death benefit of your employees, even when they leave your employ, as long as the contract stays in force. 9 is more important than the other 8 combined. And we'll explain that when we talk. That is a game changer. It's a major reason to buy it, but it takes a few minutes to understand. We're not a sales and marketing company. We're a private equity firm that hopes to go public in 2 years on a CPA 2.0 business model. We've had a CPA due diligence community for over a dozen years that has evaluated over 100 different tax attorney and cost-saving solutions. And we can make those available to you when we talk as well. ERTC for us is a door opener. We just charge less than other companies, have the ability to scale, and our close rate is pretty close to 100% because they're one-trick ponies. ERTC is just one of many things that we do that can dramatically reduce your costs, and everything that we do other than ERTC has no upfront cost and no net cost to you at all. So we're in the business of improving profitability. Our CEO wrote 3 books totaling over 800 pages, and we have several books coming out about ERTC, all designed to help you close your deals. And we've been offering CPAs continuing education credits for over 20 years on advanced tax planning concepts used by tax attorney and industry experts. What we also did that's unique to ERTC is we bolted onto it a very lucrative 2-level override sales agency model used by life insurance companies. And when you look at it, it's easy to make a lot of money giving away millions of dollars of government stimulus money. It's literally a once-in-a-lifetime opportunity for you. There are big differences in the capability of ERTC providers. Our team are former Pricewaterhouse auditors. We have done over 300 cases in a few months, and we've created a software infrastructure and back office that can support 100 new applicants a week. And we provide the paperwork for an audit which fulfills the IRS requirements. The IRS requires a standardized approach to maximize your credits versus an individual approach case by case, or using in-house departments and small firms and accountants. They do not have the specialized expertise in tax credits that we have and will not process enough cases to have a credible standardized system. Thanks for watching. If you're interested, here is our contact information, and email works best.